Welcome to Finpod, your daily financial digest. I am Evan, and we are here to break down today's market action. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock insights. Let's dive in. It was a rough session on Wall Street today, as markets reacted to the Federal Reserve's latest interest rate decision. The major indexes closed sharply lower, with the Dow falling over 2%, and the S&P 500 and NASDAQ both sliding nearly 1%. The broader market sentiment took a hit as the Fed kept rates steady but signaled some concerns about inflation, leaving investors worried that the central bank might be falling behind. Geopolitical tensions also flared up, adding to the volatility that gripped trading floors throughout the day. Meta is front and center after reporting second quarter results. While the company beat on revenue, investors are reacting to a decline in profit caused by rising legal and severance costs, and the stock is feeling the pressure in after-hours trading. SOFI is also in the spotlight. Despite posting record loan originations and beating revenue estimates, the stock dropped nearly 9% today, largely due to insider selling and broader market caution regarding fintech margins. Microsoft is another key name, with investors laser-focused on its cloud revenue and AI capital spending as they await the full impact of its latest fiscal fourth quarter report. Finally, Bloom Energy shares are on a wild ride, jumping earlier in the day on blowout earnings and raised guidance driven by massive data center demand, though the stock has since moderated. Qualcomm also saw a slide after its latest earnings report, with investors weighing solid execution against a slight miss on per-share earnings. In the AI economy, the narrative remains centered on the infrastructure buildup. While the market is increasingly scrutinizing the massive capital expenditures from big tech, companies like Bloom Energy are proving that the demand for power in AI data centers is very real. We are seeing a shift where investors are no longer giving a blank check to AI projects. They want to see immediate, high-margin software revenue to justify those heavy investments. This has created a more selective environment for AI-related stocks, where only those with clear, profitable growth are finding support. Looking at stocks in focus, beyond the big names, the sentiment remains defensive. Investors are rotating out of high multiple growth stocks and keeping a close eye on companies that can demonstrate pricing power and operational efficiency in a volatile macro environment. On the earnings front, it has been a busy day. Amphenol reported record quarterly sales of nearly $9 billion, beating expectations as demand for its interconnect products surged, driven by AI data center needs. StarBucks also saw shares jump after reporting a beat on both revenue and earnings, with management raising its full-year guidance driven by turnaround efforts take hold. Meanwhile, ARM Holdings reported record revenue and beat earnings estimates, with its data center business showing strong momentum, though the stock remains volatile. Lastly, GlaxoSmithKline reported strong core results and announced plans to accelerate its research and development pipeline, beating analyst expectations despite some impairment charges. That wraps up today's look at the markets. It is a complex landscape out there, but staying informed is your best edge. If you enjoyed today's episode, please like, share, and subscribe to the channel, and drop a comment below if there is a specific stock or sector you want us to cover next. For more, visit Fintwit.ai for all your stock recommendations. Thanks for tuning in to Finpod, and I will catch you tomorrow.